Hey, good day, everybody. Still here for the Daily Market Pulse. It's Monday, March now. It's March 3rd. We're in a new month. So we saw the market really take a little bit of a nosedive, and then they did trim their losses. They did bounce reasonably well, but nonetheless, it was a pretty deep shock. But it actually all kind of makes sense. And but it actually kind of happened pretty much in lower volume. So nothing to be overly concerned about. Although it's back-to-back down days for the Nasdaq, first time in a while. Let's take a look at the charts. Okay, so the Dow Jones, we saw essentially that from the low here to the original breakout area, it actually came right into the high on Friday at the 1272 extension. So we wondered with a spinning top what that would do. And with a fresh crossover, the 8 over the 50, and the 20 still lagging back here, what would happen? So we thought that it could come back. If it was going to come back, it was going to test the breakout area, which it did. Did come a little lower, but didn't, came back up. This could still come back toward the 20. It's possible, and 16,000. It's possible. But low volume, you might think that it actually might stabilize, come back up again probably at some point. But I don't know. There's some just weird stuff going on between the VIX, this, Treasuries, the yen. It's all a little weird looking. So let's look at the S&P next. Okay, S&P. Change of polarity we saw, remember, it was at 1835, broke out Thursday, pushed higher after a slight retest on Friday with a spinning top, and then right back to retest not only the 8 moving average, but also the same 1835 area again, and closing pretty much right there. So far, everything's cool. The problem, though, is whether there's some validation, there's some, you got a divergence here. Prices are going up. There's a divergence, a negative divergence on the stochastics. Now, it doesn't mean anything just yet. It may not be, it's maybe too early, but it looks a little scary if that's real. Because obviously we had one here. We had, of course, a positive divergence here with prices coming down. So that actually, obviously, we know what happened there. So what's going to happen here? So is this going to come crashing back to where the moving average is? That's quite possible. It's quite possible, especially with what we're seeing in treasuries and the yen and everything else. If they're going to be continue their inverse correlation, you start to think that that's might be what happens. So if you look at the Nasdaq now, okay, so the Nasdaq, you remember, was grinding up, nothing real aggressive, had already broken above the polarity before, and then of course there was a chance that it might come back down and retest the breakout area, which it did all at once. So you have a red candle, and then you have a massive open on the downside, right back to polarity, and then the bounce. So of course we got a green candle with a slightly lower wick. Nice rebound, nice reversal, as I said earlier, trimmed, just about most of its losses, finishing near the session high, but obviously still down for the day. But it was an immediate, almost like buy on the dip sort of effect here. Still room to the 1272 extension of 43.64, and then all the way up higher as well. But so it's all, again, it's all very interesting with the same divergence here again. Now we've got the drop in price. Is that enough? Is that enough to? I don't know. I don't know about that either. So let's keep on. Let's keep going here. And interestingly, the TSX, it just continues to have these tiny little real bodies and a perfect little flag right up to the 8 moving average. Shooting star, bearish engulfing, doji, nothing, shooting star, doji. So it's all like highly undecided. It's so, but the whole pattern still says higher. 8's up, 20's up, 50's up. They're all catching up now. 200 is up. You're just near an over sold state. So it all says, screaming higher, it seems like. At least it appears. Let's skip right over to the US Canadian dollar, I think, at this point. Not much here, still flagging, holding the 20, holding the 8. Not much there at all. Euro, we can take a little quick peek at probably as well. Euro had that big bounce on Friday right into resistance. It was a question what they were going to do next. They just obviously just gapped lower in the open, but they're still between the 137 and 138 a quarter. Everything looks fine. You have a fresh cross over the 20 over the 50, which is still flat. But you suspect this is going to want to break above 138 and into 138.50 plus at this point. So let's look at the Treasuries. Okay, Treasuries, perfect bull pattern here. You got the long pole, you got the nice scoop. There was a resistance up here. We were talking about that level. So we said originally 133, 134, 135 was our targets. They ran into those levels as of today, and they even went higher than 135. So this was the thing: is if the treasuries are going higher, what does that mean for the markets? Well, oddly, Friday we saw them kind of both going up for the most part and holding fairly well. Um, Now we see the treasuries go up aggressively, and we saw the markets drop fairly aggressively. And this is a very bullish pattern, looking like it wants to break out and go even higher on some kind of a measured move. So what does that mean? Does that mean the markets are really going to collapse at this point? This doesn't seem reasonable. Doesn't seem like it's time. So it's odd. The whole thing is kind of odd right now. So I'm not sure what to make of this just yet. There's a spinning top. There's of course, after hours, there's a whole lot of nothing. But right now, support would be expected right at the dark cloud cover high, right at the window that's here as well. So as long as it holds, then you're expecting higher. Does that again mean lower for the markets? So the yen is next, and the yen is popping and looking like it's going to its target of the last pivot area. It's a little, after hours, it's a little sideways, but it looks like it's got more room upside. The 8 is now crossing over the 20. 50 is just flattening and starting to rise as well, so that all looks good from that vantage point. So I like the yen higher. It looks a lot like the treasuries, but the flagpole is not quite as long. Gold resuming its activity to the upside. It was flagging, retesting 1320. It pushed off, looking for 1360. That's essentially the target now. 1360 is the target. Silver is lagging. So you see where 1320 is and 1340. The 22 mark was in fact the 1320 area equivalent. It's dropped back lower, whereas gold is already above the equivalent of 22 and into the 23 area already, which is this 1360. It's a little odd. So I'm not sure what silver is waiting for exactly, but it's a little weird. Oil was consolidating, if you recall, for multiple days, and when the markets pit opened on Sunday afternoon, it was all systems go, and it raced higher. So there it is. It broke out aggressively over 103. So we had our targets of 101, 103, and then the next target was 105. Well, guess what? It already hit 105, essentially. Today's high, 105.22, right? So it already accomplished it. Next one, to me, might be about 108 approximately. So a little bit of a pause now, but that's a beautiful breakout after a perfect consolidation. So I like oil higher still. That looks good there. Let's move on to small caps real quick. We'll do that one. The IWM, so it pulls back into the former polarity area, the 8 moving average, and so room to the upside still. And then we'll move on to the VIX. And the VIX, of course, popped. It was stuck in a very unassuming state. It was very quiet, just sitting there kind of jammed between 15 and 1350, not looking like there's much fear at all. The markets were going to go higher. I was expecting this to sort of drift lower. But instead, we saw the pullback aggressively occurring, and we saw the VIX popping aggressively as well. And I did say if it was going to pop at any time, look for 17, and it just fell just short of 17 as a high today. That's where the window is. So what happens now? You have a 20 that's declining, 50 and an 8 that's declining or sideways and flat, but price is still above them. With an overall series of lows that are going higher. So it makes you wonder again, treasuries higher, yen higher, VIX higher, markets already slightly lower with support, mind you, but will it collapse? You never know. And nothing's super clear. That's the problem. I thought with the selling off last night in the futures, I thought they were going to resolve it overnight like they've used to, like they have so customarily in the past. And instead they continued it. They advanced it. They increased the selling instead. But the volume's still low, so not a whole lot to fear, I suppose, just yet for now. All right.